countdown to the Union Budget 2023 has begun. The Prime Minister is meeting economists and industry leaders over the weekend. Now, on the property show, experts give us the wish list for real estate. More importantly, we decode will each of the demands result in any benefit to you, the home buyer. Also on the show, a snapshot of one of India's fastest growing housing market, Pune. Will the buying momentum continue, considering EMIs have risen 5 times in 2022? Now let's dive into our top discussion on budget expectations. Joining me is Sanjay Dutt, MD and CEO of TATA Housing, Anshul Jain, Managing Director, India and Southeast Asia, Cushman and Wakefield, Sunil Rohakale, MD and CEO of ASK Group. Now, 3 heavyweights to weigh in on our simple questions. What can the Finance Minister do to make homes more affordable in 2023? Gentlemen, let me take a few of the big demands which are there on everyone's wish list and break it down for our audience on what the impact of it can be. And I'm going to start with one which can have immediate impact and has been the industry's clamor for many years to come. And that is to increase the deduction available on home loan interest under Section 24 to rupees 5 lakhs from rupees 2 lakhs. Sanjay Dutt, this is one demand. Looking at the fact that 5 times CMIs have risen in 2022 alone, do you think this can cushion the blow? One thing which can come through in the budget.
Manisha, definitely there's a very strong probability. I don't know whether it will be 5 lakh, but there is a merit to take it up from 2 lakhs to 3 to 4 lakhs minimum.
Okay. So, all right. Why just 3 lakhs? Would you, Sunil, agree that maybe 5 is not an unreasonable demand, considering that this hasn't changed for more than a decade, this number?
So my sense is that that 2 to 5 we have been discussing for quite long, and the finance ministers have refrained from taking the bold step on that side. But they have done a CLSS, which stopped last year. So if you do CLSS, which is a first-time home buyer, and give him a credit-linked incentive plan to buy a home and increase the home ownership, I think we serve the same purpose. So either CLSS or 2 to 5 lakhs, either of them is required for the growth of the affordable housing.
So 2 to 5 lakh will not just cover, under 45 lakh homes, but also expand to cover everyone. The current price band of CLSS is applicable to 45 lakh for a property. And I think there is also demand, Anshul Jain, that, affordable housing should be considered to be at least 75 lakh. And not just limited to 45 lakhs, particularly in metropolitan cities where delivering houses below 50 lakhs is really difficult, looking at high cost of construction and land. What's your view on it?
Well, absolutely. I think it's a no-brainer in my mind. You look at how the urban villages have actually morphed in most of the cities, right, where people obviously who can't afford proper housing then go into these urban villages and live in a lot of unauthorized construction. So there's not only a kind of commercial sense to it, but there's a social element to it to move people into proper homes. And that will only happen if the overall limit actually improves, so that the pressure on the lowest level is less, and people who can afford up to about 50 lakh, 60 lakh, 70 lakh rupees get that benefit. There's no question about that.
Okay.
You need to be in step with the inflation and the cost in metropolitan cities.
Sanjay, the average income of this country is, average household income in this country is 23,000 rupees. So really, can people afford, people in the EWS category even afford something like a 75 lakh rupee home? Or do you think something like reintroducing Section 80 IBA, all of those for affordable housing projects might help in what Anshul is saying, that, have more affordable housing supply in India?
Manisha, that solution is a tough one. I don't think this will happen in a short period of time. This will really require a very structured program to really make this work. And so far, we've not been able to do it. I think what can happen and make a difference is if you reduce the capital gain on second home, third home, and allow the rental market more privately developed and make these homes available at much lower rentals. And the second way to approach it is to improve the infrastructure, which the government is doing already, and improve the infrastructure at such a large scale in the city and not just highways. that commuting is less of a burden, and therefore you unlock supply on the outer periphery and bring the overall rate of real estate down and manage. So these two approach may help.
Okay, so infrastructure, I think we are expecting a big thrust, but there is also, Sunil, a question of, 4 lakh homes stuck. Look at what happened with JP, right? In that case, you had a resolution process, but you've not been able to so far even resolve it for home buyers who've been stuck. Any views there? I know it may not be immediately in the budget, but what can be done on that front to make sure that, we keep homes a little affordable by trying to increase tax breaks and also, probably reducing capital gains, but more importantly, at least give existing home buyers their homes?
No, I think, Manisha, you touched a very, very important topic, because real estate industry has an ecosystem of customers, developer, lender, and an investor. The industry can only grow when all four have an optimistic view and has a confidence in the industry. Today, the lenders and investors have really been shaken, because the process of IBC, the way it has been panning out since it is rolled out, barring those large few corporate IBC cases got resolved and we celebrated as a country, meaningfully, the 270-day timeline is completely haywire. And I don't think there is a meaningful progress has happened on the real estate resolutions as far as IBC is concerned. So I clearly feel the real estate as a sector, which actually integral to the economy, because it has created a lot of formal, informal jobs, is the second largest employer. We have to gain the confidence back of the lenders and the investors. That's number one. Number two, if you see, Manisha, we came out with a fund called Swami Fund.
Yes.
When we started Swami Fund discussion, the opportunity of a stuck project was 55,000 crore. So we needed 55,000 crore. What we got in reality is 15,000 crore. We had 4.5 lakh number of units were stuck. And what we could able to impact, no doubt, Swami Fund has done a fantastic job. So today, I feel in this budget, we should have a very clear-cut, serious thought for the industry to gain again a confidence between the stakeholders that there is something like a distressed asset fund for real estate or a bad bank for a real estate, so that at least those home buyers who are first timers, who have applied for the project, paid money and still waiting for years and years for completion. I think we need not wait for the courts to knock the doors and solve every problem. We should have some kind of private public partnerships for such kind of bad bank
projects. I would agree, because it's not just pre-RERA, even under RERA there are sometimes projects are still getting delayed and getting stuck, but that's for another day. Anshul, take it forward from where Sunil has left. Whenever I've spoken to Irfan Qazi, and we did do a discussion in December, he said it's really not the lack of funds. The problem with taking over stuck projects is that we can only take those where there is still some meat on the table, and they still need to earn some returns, right? So should the government really look at just creating a rescue fund which isn't looking at returns but just looking at completion? Should we move in that direction at all?
I think given the proportion of the problem, the answer is really yes. Because ultimately we have about 400 or 1,000 units which are stuck. The good news is that there are people who are waiting for those. There are people who are buyers and they'll willingly occupy it. So these are not unsold, whether when you even complete it, that will become ghost town, right? And of course, when you have people living in it, the overall economy kind of benefits. There's also, immense amount of resources which has already gone into these. So rather than let that waste, which is public money, private money, and everything else, I think it's imperative on the government, I suppose, at this stage to help it. The big question is, will that in future trigger requirement for government where there is a private sector failure? But I think what we've got to keep in mind is that RERA, which obviously got introduced post this particular failure that we are talking about, has largely been able to control the problem of completions. And therefore, we don't anticipate this problem to be this large in future. But there's a whole lot of, products which are incomplete, people are waiting. I think there needs to be a one-time resolution for that.
I think so, because, home buyers is an individual pain. Otherwise, when you can't have ask government to bail out all big businesses, but that could be just institutional pain. Here's the only sector where it is a personal pain. Anyway, we're going to move on to the other big demands, which can easily be considered by the finance ministry, and ask our experts whether any of them can be considered. One is, of course, an industry status for the sector, what it means. The other nuances of taxes which can be done is increasing the timeline for under construction buildings to set off capital gains under Section 54. Right now, there's a condition that it must be completed in 3 years, and really, under ERA, nobody is even committing to completing anything in 3 years. Everyone's taking 5 to 6 year timeline and removing the rupees 2 crore cap on capital gains for reinvesting into properties. Sanjay Dutt, any views on any of the things that I've read out, and then we'll move on to commercial and other larger issues of the budget?
I think each of these merit a reform. And I think government will look at its total bucket of collections and very judiciously will relax few. I think the focus of the government has been at the bottom of the pyramid on the affordable segment. I think the government should take a conscious decision that the middle segment, which is the mid housing, is a very large portion. And if they really want to give relief to that large population base, close to 400, 500 million people, they'll have to give these concessions, including capital gains, which I spoke about earlier.
Okay. Commercial then, Sanjay. Tata Housing Tata Realty is now looking at commercial and office market space very, very carefully. Anything on the wish list?
175 million square feet under SEZ policy came about, and with sunset clause, the future of these developments is at risk. And nearly 50% or 70% of that ownership is now institutional, with private equity and funds. And the vacancy in SEZs is now touching 40%. The finance minister made an announcement last budget that there will be an amendment to the existing act allowing domestic tariff companies to work, and that has not been implemented. And that has resulted in lose-lose for every stakeholder. Tenants need space and they're not getting it. The developers have vacant SEZ and they're not able to lease it. And the institutional investors and the retail investors who have bought units under REITs are also suffering. So government needs to expedite that.
All right. Anshul, would you agree with that? And this big demand, which is always there, give the sector an industry status.
100%. I mean, you look, 70%, India is absorbing at the rate of 60 to 70 million square foot of office space a year. And we are not able to build fast enough at this stage. And there's so much space which is locked up in SEZs. I think when Desh proposal came in, it actually gave a lot of hope to the industry and to the office occupiers. I think it's an absolute must. It'll bring a big relief. It'll ease off the rental pressure. The cost competitiveness of the country improves. And again, it's a resource which is sitting there to be used. And it's only logical that it should be used. As far as industry status goes, to be honest, I'm almost lost as to what does that mean. We've been asking that for 12, 14 years.
Let's ask Sunil that. What does it really mean, getting the industry status? Sunil, will you be able to, will the industry be able to borrow cheaper, getting the industry status, or is just one of those things which is cool to talk about?
No, I think it's very cool to talk about the industry status. Frankly speaking, what we need to realize and recognize that if this is an industry where the investors are keeping interest into investment into these kind of assets, which are residential, commercial, whatever, the investors, when they invest, they also have the carry units. And the carry units, very unfortunately, in this part of the world, in India, is being taxed at the business income tax rate or individual's tax rate, and not as a capital gain. It's one of the single largest incentive for the investment managers to raise capital globally, domestically, and put into real estate to work. So rather than industry status, I think we need to just make it simple things like, carry units to be a capital gain. Before industry status, Manisha, what we need is can you streamline the complicated long-term and capital gain structure tax for real estate? We have to wait for 2 years, then you have a different tax rate. In one, short-term capital gain is taxed at a individual's tax rate. These are very complicated one. We have to reduce this arbitrage between the asset classes, specifically listed equity and the real estate. I think we need to look at that. That will also impact the REITs. That will also impact the real estate long-term, short-term. Investors has to come back along with the end users there. So I think that's more important than industry status at this point of time.
Okay, fair enough. So, Sanjay, you're raising your hand, but I'm giving you only 15 seconds. Unfortunately, we've shot up.
Manisha, something very important. There is a lot of political interest in the real estate sector. And to ensure that the vested interest of those is eliminated, you need to make this a industry and recognize as an industry. It has much deeper impact, I can assure you.
Okay. Gentlemen, we will close there on our budget expectation. Of course, the wish list is much longer, but we just wanted to highlight some of the most important things because Prime Minister is having a meeting and it's nice to get it out there. Thank you very much for joining me. On the other side, a deep dive into Pune's real estate market, what happened in 2022 and what does that foretell for 2023. Stay with us. India's fastest growing housing markets, much loved for its cosmopolitan nature, its good weather and of course now for the jobs it's creating in IT research and development and even manufacturing. Now Pune clocked decent gains in home prices and sales in 2022, much in line with the rest of the country and the top 7 cities. What are the numbers predicting for 2023? How much will prices rise further? Joining me to answer the questions is Rohit Gera, Managing Director of Gera Developments, who come out regularly with the most in-depth report on Pune market. So I'm going to ask you, I'm looking at the price rise and saying, all right, so prices did go up by 10 to 11% on an average in 2022, but they're still only 8% up from 2015. So, Rohit, they went down and then now they've recovered, isn't it? It's still an inexpensive market, would you classify?
Absolutely, Manisha. I think the fact that, look, last year's 10% in and of itself is a good number. But when you look at it from a previous peak, and that's 7 years ago, we're only 8% above the previous peak. I think that there's a lot of headroom for the market to go up. There's potential for the market to go up. Developers have been absorbing price rises on the cost side for a long time. Affordability looks really strong. So barring some of the other global risks and headwinds that we see, I think there is a potential for further rise in prices in this year as well.
Rohit, we are still talking about the fact that, EMIs have gone up 5 times in 1 year. Affordability has dipped by 3.5%. Your report mentions that. Do you still believe, because at least in NCR, I'm beginning to see that euphoria of buying already starting to taper off?
So you're absolutely right, Manisha. But if you look at 2015, our interest rates then are about what we are at now, right? And you look at over a 5 or 7 year period, and you should look at real estate over a longer term. If prices have only gone up 8%, salaries in the same period, even if you look at just inflation, right, would be at about 50 or 60% gains just on the income levels of people over the same duration. So when you look at affordability, it's about the increase in salaries, it's about the increase in the cost, and it's about the change in the interest rate. So yes, I agree that interest rates have indeed moved up, and that does dent the affordability. But at the same time, when you look at, you have to correlate that with the increases in salaries. Now, we've seen that there has been a fair amount of pay hikes as far as the IT professionals who are the primary buyers of these homes. So in terms of salary increases, I think that's what negates, or that's what covers up the losses on account of interest rate rises.
Okay, so far you're saying that at least they're not out of control. People still should be able to find buying homes in Pune affordable. Your report mentions a very important point. It says new unified development control norms, which are actually going to allow a lot more development to come up. So will that not keep prices more modest as well, or price rises more modest?
Yes, absolutely. Yes, absolutely. One of the factors that keeps prices in check and control is the quantum of supply, right? So certainly the Unified Development Control rules, which have been made applicable for the Pune Municipal Corporation and the Pimpri-Chinchwad Corporation areas, there is already a greater potential which we've seen there. The PMRDA region, which has the largest land area under its jurisdiction, once the UDCPR comes in there, I think certainly there is a much greater potential. But I think, developers are also being cautious in terms of their launches. The phases are becoming smaller. So it's not that people are just blindly going out and launching projects. So I do think that, and look, as density goes up, the buildings become larger, the buildings become taller, the cost of construction goes up. Therefore, the exposure and the risk of developers increases, and therefore they reduce the phases are therefore being planned accordingly. So yes, the potential certainly rises, but that doesn't necessarily mean that inventory will automatically rise because potential rises.
So give us a snapshot of 3 key highlights, and what sort of price increase do you think people should be ready for in 2023 in Pune from good developers?
Okay, look, so I think making predictions is not something, can the prices rise? Yes. If looking at purely real estate, I think there's another 5, 8, 10% price rises. But at the same time, we are seeing global headwinds. The biggest risk, as far as I'm concerned, isn't so much the interest rates, which I think are peaking, or there may be one more rise, and then the interest rates don't seem like they'll rise too much more. But I think the bigger risk is on job security. What we are seeing in terms of the news as far as layoffs in the US, if that doesn't trickle down into India in any meaningful way and sentiment continues to be positive, I think, an 8-10% increase is imminently possible. But in case job security is at risk, then I think things slow down and things go in the opposite direction. Sales will slow down. You have an oversupply kind of risk. So I think that's where the big joker in the pack is really that.
Really, how the global economy will pan out and IT sector will hold up or not. Rohit Gera, thank you very much. Thank you. We'll have to wrap out there. Now, we're keeping our fingers crossed that India will be an outlier and we will do much better, even when global headwinds, or if globally there is a recession, I think we will survive and do better. On that note, I'm going to wrap out of this discussion. Thanks a lot for joining me, and to all of you for watching the show. Goodbye.